Yo, yo, yo. What is good, guys? Hopefully, you guys are doing absolutely amazing today. I wanted to hop on here today to introduce myself and give you guys a little bit of a lesson on how to actually be profitable taking our signals. All right. So, first and foremost, my name is Jose. Pretty much living right now out in Cartagena, Colombia. Been traveling to a couple of different places inside of Colombia for the last couple of months. Pretty much almost been a year now, actually, that I've been traveling around here. And yeah, just really never really, I'm from this country, but never really had the opportunity to do it until I got myself in the position to create online streams of income, which is what we teach you guys how to do here, right? And really the first step in that is to go ahead and learn how to actually take trades, how to actually execute a trading plan, to go ahead and allow yourself to gain the skills to do this long term and actually be consistent with it, right? This isn't about, going ahead and, hitting one big trade and, that's it, right? We're not talking about, one trade. We're talking about making a trading career. So you can really gain the consistency that you're looking for to be able to replace streams of income or even to be able to just add on to the streams of income that you already have, right? So that's what today's lesson is pretty much going to be about. So without further ado, let's tap in. All right. So basically, what we're going to talk about is really how do signals really work, right? And really, all signals are, guys, is you guys have the opportunity to get an insight into a trader's trading plan, right? That's really the whole purpose behind creating this whole signals idea, right? So rather than you guys going ahead and having to, follow a strategy to decide when to click buy or when to click sell, you can go ahead and find that off of a trader who's already been doing it for a really, really long time, right? That's the purpose of signals, right? So this isn't something that, you're really going ahead and, necessarily trying to do this long term to, create your stream of income. I truly am a strong believer that the only way you're going to be consistent in trading long term is if you're following, it yourself, if you actually gain the skill set yourself. But what these signals can do for you is give you the opportunity to one, get really comfortable with the idea of managing risk, right? Of having like exits, an exit strategy, right? And then just using somebody else's entry strategy in the meantime while you are learning how to do it yourself, how to find your own entry strategy, right? So the purpose is that, right? So essentially, all you're doing when you're taking signals is you're using somebody else's trading plan. So now, what are the things that you need to really do on your side of things, right? Because we're going to tell you when to enter, we're going to tell you where to put your stop loss, where our targets are going to be. But you as a trader, it's all about your execution, right? When you're going to be, even though you're going to be copying somebody else's ideas, you still need to get that same concept of execution. You still need to have a good understanding of how to really execute here, right? And how it's really going to work. So the things that, you control when it comes to taking the signals is you are going to control, obviously, first and foremost, your risk, right? So how is your risk pretty much defined, right? So your risk is defined by your price per pip, okay? So your price per pip is basically what you guys are assigning, a value to each movement in the market. So that's all a pip is. A pip is a movement in the market, and you're going to decide how much that pip is going to be worth. That's what your price per pip is, or your lot size, right? So, you can make that $1. So every single time the market moves one pip, you make $1 or lose $1, right? And so that can help you clearly define your risk. Because if you're going to go ahead and, if you see a signal and, I send out a trade and I'm like, okay, guys, we're risking 20 pips on this position, and you only want to risk, let's say, $20, right? You're going to be doing a $1 per pip risk allocation, right? So obviously we're going to have a separate video to really talk about this, but that's one thing that you really control, right? That's one thing that you really control. Now, the next thing that we're going to talk about is having an exit plan, right? So for my signals in particular, right, I'm going to tell you guys my exit plan so that you guys can really, get an understanding of how to look and create that exit for yourself. So I want you guys to understand that for me, what I'm always looking to capitalize on is I'm looking to capitalize on the risk to reward of a trade, right? I think of everything in terms of risk to reward. So you won't really see me, being like, oh, we hit 30 pips or 40 pips or whatever. You're going to see me be like, we hit 1 to 3 risk to reward, 1 to 4 risk to reward, whatever it is. So what does that really mean? Basically, what that means is based off of, how big your stop loss is, right? That's going to determine what your risk is, right? And based on how big your take profit is, that's what's going to determine your reward, right? So our risk to reward ratio is basically the balance between those two in a way, right? So I'm going to go ahead and show you guys an example of a risk to reward ratio. So let's say this is a trade that we're looking to take, right? Let's say we're taking a trade down here or something, right? We have our stop loss, our maximum risk below this low, right? And we have our take profit all the way up into this high, right? So this is really the idea here that we're thinking. So if we have, here we're risking across this box, we're going to be risking however amount that you want to risk, right? So like I said, this is what you are deciding, right? So what I really recommend to do here is like you want to be very, very consistent with your risk, right? This is the only way that this risk to reward plan is going to make sense. But we'll tap back into that in a sec. But the idea is this, right? So this trade, let's say here, runs for about a 1 to 5 risk to reward. Meaning if you risked 1% across this stop loss, this is your initial risk, right? And then price starts to move in your favor and it hits our targets, right? It hits our take profit, then you're going to be making 5% on that trade. So you risk 1% to make 5%. This is the way that I think about my trading. I'm always thinking in this risk to reward type of way because I want to find opportunities that are low risk and high reward. So I'm looking for price to hit at least 1 to 2, 1 to 3 risk to reward before I'm looking to take any kind of exit into the market. Because now I'm going to be in a position where I don't need to win every single trade. I don't even need to win the majority of my trades to actually be long-term profitable inside of this market because I'm in a position where I'm making sure that that risk to reward is high. And we're going to talk about win rate and all that stuff in a bit. But this is the concept, right? Now the issue becomes with a lot of traders is that sometimes they'll go ahead and let's say they'll take multiple trades in a week, right? And one day of that week, they decide, hey, I'm gonna, buy over here, let's say, right? So I'm gonna go ahead and, move this one over, right? Or just delete it. So they're like, I'm gonna buy right here. I'm gonna have my maximum risk right here, right? So as we could see, this trade lost, right? They were targeting these highs, but then this trade went ahead and lost, and price came down towards the stop loss, right? Now what some people will do is they'll have, let's say like before the trade started, they didn't think enough about their risk, and they risked more on this loss than they were able to make on the win that we had over here before, right? And that's a big problem. If you risk more on one trade versus another, you're not going to be long-term profitable, right? Especially playing the risk to reward game, because we want to risk 1% or less, right? Across all of our trades, across all of our stop losses. So that way, if I take a loss, I'm only losing 1%. But if I take a win, I'm winning 2 to 3 to 4 to 5% on that trade. And that's the purpose of playing this risk to reward game. Now, what that's going to allow you to do, it's going to allow you to not necessarily need to win, like I said, all of your trades, right? And you really get to put yourself in a position to not really be stressed about any single trade, right? Who's going to be stressed about just risking simply 1% of their account, right? In a single position, you can just really go ahead and set it and forget it, right? And this is the purpose that we want to do with our trades. We don't want to be overthinking it. We just want to have a predefined idea of what we're going to do, which is going to be risking the same amount every single day for that week, right? So yeah, that's really the purpose here, guys. So don't go and risk 1% on one trade and 3% on another because you like the other one better. Because in reality, in trading, guys, we already know that there are going to be trades that we're going to lose. This is already a certainty. Our goal as traders is not to not lose, but our goal is to not lose in an awful way that's going to, mess up our future progress. All right. So that's the point, right? And why is this idea so important of managing your risk and having your risk to reward? Because especially, with me, right? But every single trader really, every single trader has a certain win rate to what they do, right? So some traders can have a 70% win rate, some traders can have a 50%, 40%, 30%, right? I'll tell you guys mine, right? My win rate is about 30 to 40%, right? Which sounds bad, but I'm still managing to be profitable with a low win rate like that. Why? Because I manage my risk to reward, right? Imagine, you're taking 10 trades, right? Let's say you win three, right? And then that would mean that you lose seven, right? Meaning that on each of those losses, you lost 1%, right? And on each of those wins, you win 3% each, let's say, right? So let's say my average risk to reward is a 1 to 3. Forgot to mention that, right? Meaning that for every 1% I risk, I'm looking to gain at least 3% whenever I win, right? And so what that's going to do is it's going to mean that those three wins are going to be worth 9% each, right? Oops, how did that happen? 9% each, right? And so net profit here, right? I'm going to be taking the 9% that I won, right? And the 7% that I lost, which is obviously 1% per trade. That's going to be 7% in total. Our net profit is going to be 2%. Even though I lost 7 trades out of 10, meaning I only had a 30% win rate, I still made money that week. And that's the position you guys want to put yourself in when you guys are trading. And plus, since you guys are following, my trades, right? You really got to keep, this is why it's so important to keep your risk in mind, because understand that out of every 10 trades that we're calling out, we might lose 7 of them, right? And if you're going ahead and risking more on the losses than you're risking on your wins, your risk to reward is not going to balance out. Because let's say now, even on one of these trades, let's say you decided to risk 3% on one of the trades. The rest of them, you all risk 1%. But on one trade one day, you're like, oh, this one's definitely going to hit. Let me risk 3% now. Right. Well, guess what? Now you're no longer at a 7% loss. You're going to be losing an extra 2%, which means you've lost 9% across 7 losses. Right. So that means in total, now you haven't won anything at all. So you guys can see how just that small mistake can really cost you guys in the long term with this. Right. So making sure that you understand what is the win rate of the strategy you're using, which is obviously going to be my strategy or whoever strategy you're using, and what's the average risk to reward there, right? Now, a lot of the times when we're taking positions, right, we are looking at it in a way where, we don't really care if this one wins or not, right? Because we understand that long term, when we're playing this risk to reward game, one win can make up for 3, 4, 5, 6, 7 losses. So that's why, again, like I said, having patience, having a good win rate, and not looking at things over the course of like one day, right? One trading day isn't important. One trading week isn't even important. What can be important is your trading month, right? Your trading quarter, your trading year. This is the way that professionals really think about this market. And this is what I'm trying to explain to you guys here. All right. So that's really the main thing I wanted to put across here to you guys, right? Start thinking of things in a risk to reward basis. Exit plan wise, typically what I like to do is, going ahead and looking for at least the 1 to 3, right? But if sometimes you'll see me go ahead and put in the chat that I'll take partials at 1 to 2. And then, we'll go ahead and look for a bigger risk to reward from there, like 1 to 4s, 1 to 5s from that point on, right? But it just depends on, what I say in the chat. So I'll let you guys know personally what I'm doing. But for those of you guys, especially that are beginners, once we hit 1 to 3, and you guys hit like a 3% gain, I'd recommend you guys just closing that out, right? Especially if you're just a beginner, because if you don't understand an exit plan of how to get out once we start to hit these higher risk to rewards, that's when you start to get greedy. That's when you start to lose more than is necessary. All right, guys. So that's it. All right, that's my lesson for today. So just as a quick summary, right? Once again, when you guys are taking signals, you're simply just using our trading plan, right? We're telling you guys from our trading plan where we see opportunities happen. Now, what you guys have to control is your risk. What's your price per pip going to be, right? What's your exit plan going to be? And with this strategy, with this trading plan that you're following with me, what's my average risk to reward and what's my average win rate? So now you can get an understanding of what to expect when you're going to be in this chat and taking, these positions, right? So, again, like I said, 30% win rate. We're looking for an average of 1 to 3 risk to reward, sometimes even higher. And so, that's what's really going to make us profitable in the long term. But if you start messing with your risk, if you start losing patience, if you start getting stressed at losses or whatever it might be, you're not going to win in this long term. All right, guys. So that's your first lesson here on Trading 101. Once again, welcome. And yeah, I hope to see you guys in the chat very soon. Peace out. Much love.